Let's take a look at our ag commodity trade here on a Friday and get you up to speed on the latest with live quotes direct from Chicago. Well, on the corn market, first of all, we have had kind of a slow go here today, but on the March futures, we currently have the trade a little bit firmer. We are up 1 3/4 at 378 3/4. That's within a penny of our high of the day now. And we have July now a penny and a quarter higher at 394 3/4. And for those of you keeping a close eye on this new crop December contract, it's at 401 3/4 now. That would be up a penny. In the soybean market, well, the soybeans have firmed up during the day. We have the March beans 5 3/4 higher at 921 3/4. And we have July up a nickel now at 947 1/2. So that's about 8 cents off its earlier low from this morning. Let's go to the trading floor at this point and talk with Scott Gecas. He's with Prosper Trading Academy, and he joins us right now on the corn and soybeans. A little firmer tone here in the last hour of trade. What's up?
Yeah, just a little bit of firmer tone going into the weekend. The interesting thing about going into the weekend, you usually see volatility pop, but right now we're seeing volatility kind of flatten. It's really not that big. I mean, we still have an hour left to trade, but right now the volatility is really flat. We have a little bit lighter volume on the future side. The one thing I really want to point out is, especially in the soybean market, is the 980 calls traded about 4,000 times today. It's got about a 13 delta, but 4,000 contracts going up on a single line, that's very significant. That's something that a lot of traders are going to be keeping a focus on. Usually when you see that big volume come in, something is afoot. So we're going to see if something comes out over the weekend. But either way, 980 calls from where we're at, I mean, that's a significant move in 28 days. So that is definitely something that we're going to keep an eye on.
Scott, I know you work with options a lot at your company there, and I was just curious, have you had a chance to compare the volume of option trading right now versus what it was maybe a year ago?
Well, a year ago, it wasn't really that big because you didn't have all these crazy headlines. So the headlines started coming in about mid-year last year. So with the headlines and the headline risk and everything that's moving left and right, the traders that are controlling the futures, they look at the headlines and they're going to spike the market one way or the other. So with options, I mean, they're more focused on protection, positioning. So with that being said, we have seen an increase in option volume in the last, I would say, about 6 to 8 months. But as far as beginning of 2018, not so much.
Well, I bet you really have seen a pickup. It's like an insurance policy for futures, and that's with uncertainty like it is. That's why they're so popular. Let's take a look at the wheat trade right now on Chicago wheat on the March contract. We currently have it trading a penny and a quarter lower at 520 1/4. Not getting much traction at all here late in the week. In the Kansas City market, you have the March contract down a penny and a quarter there at 510 1/4. We have been keeping an eye on this, wondering if the trade would react with all the frigid air moving into that part of the country by next week. So far, they seem to be like they're not believing that there will be any damage. We'll take a break right here, Scott, and then we'll come back and we'll see how the livestock trade is shaping up here on a Friday when we come back. I see where the Dow Jones Industrial Average is still higher, but now it's up about 167. Last time we checked, it was up over 200. On the dollar value, though, boy, it has been making some big moves to the downside today. We have the March futures now down 690 points. It has been over 700 lower. Right now it stands at 95.610. Just wanted to point that out as we go back to our conversation with Scott Gecas. He's at the trading floor in Chicago. He's with Prosper Trading Academy. And wondered if that dollar value diving like it is, if that would have any impact here on our livestock trade. Probably more so maybe on the grain side, but yeah, you have the Dow firming up. And I just wondered if that was helping to maybe support the cattle trade a little.
Yeah, with the cattle trade, to me, it looks more of a technical trade than anything else. So with the cold weather, it's going to support, a little bit of higher price movement. But in the last 4 trading days, we've been bouncing right off of that 125 level. So until that 125 level is pierced, we're going to remain bullish to the upside. I mean, that's been a very strong support level.
Okay, now let's take a look at the overall prices here and see what's going on. Right now on the live cattle and feeder cattle market, we have a split decision in live cattle. We have February going 30 higher at 125.65, April up 18, but you have June down 28 and August and October are 42 lower. So you have that going on in the live cattle pit. Now if you look at the feeder cattle trade, You have the March contract down 57. We're at 143.75 right now. Still well over $1 off our earlier high of the day. April down 53 at 144.85, and then you just had a complete collapse in the lean hog trade here this week. We have the February contract down $1.43 at 58.40 now, and April down $1.65 at 61.85. That gap on the charts was about $1.50 above where we are now, so they took care of that in no time on the open this morning. In fact, I believe they even opened lower than where the bottom of the gap was there. Do you read much into that, Scott?
Yeah, definitely. That break of 60, I mean, as far as the technical chart goes, I mean, it's completely broken. One thing that I want to point out is right on the open, the 58-56 put spread traded about 400 to 500 times. So what that means is that we have a little bit room to go. So with the downside, it looks like the first support level is not going to be until around 56, 55. So we're going to see how that's going to play out next week. But right off the bat, with that gap lower and that put spread trading, I mean, traders are looking for a little bit move lower.
On the cutouts, we had our new update that came out here at mid-morning, and beef cutouts have been increasing all week long, and now they have turned sideways. So now you have choice cuts down 35 cents. We're at $217.40. We have selects up 15, trading at $212.29 for the average this morning. Spread is $5.11. Now, if you look at the pork side, carcass values were up 82 cents today at 68.09, and we had the loin value up over $1. The bellies gained over $3. They were up $3.30 this morning at 122.91 per hundredweight. So there you have that. And Scott, thanks for visiting with us. I hope you have a great weekend out there.
You too.
All right, thanks. Scott Gecas of Prosper Trading Academy.